Hello traders, the title of the video is Financial Markets Trader shed more light onto the 78.6% Fibonacci retracement like a pro. Alright, have you been using the 78.6% Fibonacci retracement? Do you understand the 78.6% Fibonacci extension level? How do the professional traders use the 78.6% Fibonacci extension level? All right, those are the questions that we're going to answer in this tutorial. All right. So first thing first, we're going to start drawing lines using the Fibonacci extension. You can see that the financial instrument that we are looking at is the Norwegian Cruise Line Holding. The epic is NCLH, November Charlie Lima Hotel, and this stock start going up from here, this point here, and it went up to this point right here. Okay. Now we apply the Fibonacci extension to that price move, and we highlight, all right, the 78% Fibonacci extension, Fibonacci retracement level. Correction, Fibonacci retracement level. So that's the green line on my chart here. I need to remind traders that I do not use the 78.6. I use instead 78%, exactly 78%, because I find that more reliable. All right. So the green line here is the 78% Fibonacci retracement level. Well, the first thing that we need to understand about the 78% Fibonacci retracement level is that if the market sentiment is bullish in relation to a specific sector, this is very, very important for traders. The market is bullish for a specific sector, and stocks that pull back to the 78% Fibonacci retracement level are considered as oversold. So whenever you are using the 78% Fibonacci retracement level, do not stop only on the financial instrument that you are trading. Also pay attention to this sector, which means you want to concentrate on the market sentiment relating to that sector. So the idea is that the market sector, the stock went up from point A to point B. For one reason or another, it started coming down. Now, okay, the market sentiment is start changing from bearish to bullish. So the 78% Fibonacci retracement level, usually a financial instrument that will turn around that level will coincide with the point where the market sentiment is turning from bearish to bullish, all right, or is turning from bullish bullish to bearish. That's the opposite, all right. Okay, if it's turning from bullish to bearish at the point where the price is retesting at the 78.6% level, all right, that's bearish. If it's turning, the market sentiment is turning from bearish to bullish at the point where the price is retesting the 78% level, that's bullish, all right. So market sentiment, okay, very important to pay attention to if one is using the 78% Fibonacci extension level or the 78.6% Fibonacci extension. So for this stock, you can see it went up from here to here. As it pulled back to the green line, which is the 78% Fibonacci retracement level, you see the first time it touched it here, people bought it here. Again here, 78% retracement to the prior bullish move. It formed a double bottom chart pattern at the 78% Fibonacci extension level. So we talk about the sector. Now we want to, another thing we need to know, you need to pay attention to is the market sentiment relating to the financial instrument itself. So we talk first about the sector, by the stock itself. Because some stocks, sometimes the sector may be bearish, but those stocks are creating more value and they stay bullish and they are okay. Back in the trend. Alright, so market sentiment, though market sentiment is bearish, the financial instrument itself is very, very bullish. Those are defensive stocks, like a pharmaceutical stock are called defensive stock. Alright. Sometimes those stocks can go up when the market sentiment generally is bearish. So apart from the sector, we need to pay attention to the market sentiment relating to the financial instrument that we are trading. Is the market sentiment relating to that stock at that point in time is turning from bearish to bullish, or is it turning from bullish to bearish? One of the first reason why the market sentiment may turn just because of the financial instrument, if for instance that company has a strong balance sheet, all right, and their book value is higher than the price that we have at a 78% Fibonacci retracement level, which will have strong fundamental, higher book value in comparison to the current price, all right, it means that the stock is oversold, and okay, if they continue to create more value, is a discounted stock, we can say it's discounted 78%, therefore we should be completely stupid not to buy it. Company with a lot of cash in their bank, creating more value, gaining more market share. Here we are. They are now pulling back to the 78% level. All right. They are not losing more market share. The future looks brighter for them. Those stocks are likely to turn around at the 78% Fibonacci retracement level. All right. So the next thing that we want to know about the 78.6% Fibonacci retracement level. So we talk about the sector, we talk about the individual financial instrument. We're going to talk about, okay, the characteristic of the stock that we are trading. This also will help us to improve our 78.6% Fibonacci. Some stock very often, so they go up, they pull back to 78% level, they will find a support in this one. This is one of them. This is one example here. So check stocks that belong to the consumer cyclical sector, the leisure sector, very important. The leisure sector very often will, I should charge you for this, but I'll give it for free. The leisure sector, the cyclical sector, all right. This company like airlines, very often we acknowledge the 78% Fibonacci retracement level. Doesn't mean that we just play with the 78.6% level just because a company belongs to that particular sector. There are more to it. Technical trader will implement a top-down training method and check other things. All right. So the characteristic of the financial instrument will also help, because some stock will turn around all the time around the 78% Fibonacci retracement level. This is one example here. So it went up from here to here. Now it pulled back to where? The 78% Fibonacci retracement level and found a support. Again, same zone, it formed a double bottom chart pattern. Is it making sense? All right. Now let's see the other way around. So some stock will keep bouncing at the 78% Fibonacci retracement level. So this time, my friend, it went down from here. So I'm talking now, went down from here to here. Okay, let's put it to the tail right there. All right. So this time, the stock, the Norwegian Cruise Line holding went down from the orange spot to the next one here. We apply Fibonacci retracement again, and we highlight the 78% Fibonacci retracement level is the red line here. When I place my red spot, oops, all right, I'm trying to save time, my friend. Okay, right there. So it went down from here to here. Now you rally up to which level? The 78%. I'm using 78% instead of 78.6%. Here it is. People are trying to sell again here. But now, this is the question. Is it going to change direction here? By all means. We'll talk about this soon, talking about how to trade the 78.6% Fibonacci retracement level. Okay, let's pay attention to another one here. Pay attention to the orange spot. Okay, hold on please. I want to do it properly. All the way to the tail here, from the top down to this point here. So we are only paying attention from here to here, first time. Now it's going back up. Look, near. Okay. It's the 78% level. It stopped near the 78% Fibonacci retracement level, or this move from here down to this level here. We will say that this stock is a very friendly stock when it comes to trading the 78% Fibonacci retracement level. So the point I'm making here, that some stock has a specific characteristic, which means they are bouncing ups and down around the 78.6% Fibonacci retracement level. So far, we have talked about the sector, all right? The sector turning from bearish to bullish, sector turning from bullish to bearish, all right, or bearish to bullish. Then we turn our attention to the stock itself, or the stock itself, market sentiment relating to the stock, the individual financial instrument that we are trading, turning from bearish to bullish or from bullish to bearish due to strong fundamental, creating more value, added value, or stock is oversold in comparison to its book value, its fair value. Then now we are talking about the characteristic of the financial instrument, and we are saying to trade a stock that belong to the consumer cyclical sector, the leisure sector, very often, and also transport. Some of them, the airlines, very often will be bouncing up and down around the 78% Fibonacci extension level. So will you agree for the first time with me that this stock is quite friendly when it comes to the 78.6% Fibonacci retracement level? You say to me, yes, George, therefore we will sell here by all means, and you definitely come down. And I'll say it to you, hold it for a second, my friend, okay? So those are the things that can help us to master the 78% Fibonacci retracement. So the key point here that we need to concentrate on is the market sentiment. It's a reversal point that is highly influenced by the market sentiment. Another thing that we need to know about the 78% Fibonacci retracement level, here it comes, my friend. This is about the core value. Core value. You may say to me, Joe, you start using difficult word now. All right. It's not a difficult word. So, if something is rotten, am I speaking with my American accent or my Asian, Malaysian accent? All right. So, if something is rotten or is bad enough, all right. So, one example, I'm not saying that's the case for this stock because I don't want any director writing to me. That's not the case here. That's not the case for this stock, okay? I'm giving a different example, okay? Suppose that something is bad, all right? Or its company is not doing well, all right? They are having a bad time, all right? So they are struggling in their sector, all right? Everybody knows it. They are not making money, and the director is under pressure to perform. But out of the blue, my friend, so people are selling nicely because of those fundamental reasons. And out of the blue, the stock rally up to the 78% level after this move down. Now you rally to the 78% Fibonacci retracement level. So what is the first thing that's going to come to our mind? We'll say, why people start buying this stock, though, fundamentally speaking, it's not yet the time to buy it, okay? We will try to find out why people are buying this stock. All right. So, but after our verification, we have found out nothing has changed. They have not changed the management. They have not gained more market share. In fact, their competitor has gained more market share, and there is no reason why the stock should rally up to the 78% level. So suppose you are a hedge fund manager trading in the financial market. What they usually do, because they do a lot of fundamental analysis and they know stock that are company that are struggling back big time because they went to the management, they speak to them, they visit the factory, they talk to employees, they know what's going on. And out of the blue, technical traders, stochastic oversold, they push it to the 78% Fibonacci retracement level. So talking about the core value, okay? Something is bad. Now here it is. So something is bad, but 70% of that thing happened to be good, but the thing is bad. But now people are saying to us that 70% of that thing is good. Are we going to accept that? We will say it's a lie, isn't it? It's a lie. If something is bad, truly bad, the 70% of that thing, which is the core value of that thing, after discounting the dispersions or the wastes, okay, is also bad, isn't it? But so there's nothing good happening. Now the stock is at a 70% level. The hedge fund checking the core value is bad enough. Now we are at 78% level. That's a good reason to sell. So they will sell at 78% Fibonacci retracement level, and they will play their stop loss at the 100, above a few pips above the 100% level. Usually, talking about the core value, okay, of the financial instrument, the fundamental is too bad, but stock rally to the 78% level. It's a flag. Okay, the hedge fund will say, what's going on? They will rush and sell it. And these are purposely, okay, purposely accomplished trade. Those are trade that are purposely, they will just sell because their intention is to sell that stock, and nothing has changed. Now it's at the 78% level. They will sell it big time. You see how they will sell it pew, 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 pew. One more time, what I'm explaining here has nothing to do with the Norwegian, all right, cruise line holding, nothing at all, all right? Very, very important, all right? Nothing at all. What I'm trying to communicate to you here, the core value, how it affects the 78% Fibonacci retracement level. The hedge funds love the 78% Fibonacci retracement level. But you need to be very careful. What we have noticed is that a lot of technical traders love the 78%, which means people learn from it for the first time, so they see it come to the 78% level, they sell. They say, wow, that's the magic level for a stock, for a Fibonacci retracement. Another time, it hit the 78% level, it happened to be a cyclical stock, and they buy again. Wow, and it went up, and they keep doing it, and it's working. So people start thinking that there's something special about the 78% Fibonacci retracement level, but there's nothing special about it. Nothing special. It's all down to the market sentiment. It's down to the fundamentals. Like I said to you, the market sentiment, that's the key here. So do not just buy or sell because the price is at a 78% Fibonacci extension level. All right? Very, very important. Very, very important. People can apply this strategy on a 4-hour time frame, on a daily chart. But if you see this on a quarterly chart, on a monthly chart, pay attention carefully to those stocks that are reaching the 78% Fibonacci retracement level on the monthly chart, quarterly chart, and yearly chart, because the hedge funds are watching those key levels. And now the question is, how do we trade it? Well, if you want to trade it, use differential frame trading method. That's it. So here we are, you're on a monthly chart. The common centralized kaput, and the price retest it here. So common centralized kaput. Okay, the price is in the zone of 78% Fibonacci retracement level. If we push it down to this low here, 78% is this one here. One more thing before we continue to talk about how we trade it. Understand also that not all Fibonacci traders draw their Fibonacci retracement the same way. Here I push it all the way to the low. Some will push it to the closing price. So as you are playing with that 78% level, go into the mind of other Fibonacci traders and try to see how they are looking at it. Where is their 78% Fibonacci retracement level? So the common sense line is kaput, prior retest, it break below, retest, that's what the price doing all the time. This is the decision I make here at 78% Fibonacci retracement level. So the only way, all right, am I patronizing you now? The only way, so now, there are many ways we can trade it, but I just want to get your attention. That's why I'm speaking to you like this, to use a different time frame trading base. So we have a scenario here. The price now at the 78% level, it belongs to the cyclical sector. Will people try to sell it again here? That's the question. Now, as a technical trader, we must use a different time frame trading method. Monthly chart, trading setup, daily chart, trading signal. Is there a signal? So connecting this point and this point, allow me to draw that trend line. We can't ignore it on a daily chart. So trader will say to me, George, okay, in that case, because I kept my eyes wide open, it looks to me that we have a slanted, is it? Head and shoulder. The head, shoulder, shoulder. But it's still above that bullish trend line. So people are selling here now. But the better scenario will be to break below that trend line. One more time, that will be better because we have other key level here, you see. And to retest it or form the first lower high below the first lower high, retest or form a lower high below that trend line, and the common sense trend line here is kaput, and one candlestick bar popping out a bit. That would be better for us. Some trader may say to me, I'll give it a chance like this as soon as this common sense is kaput, but you are selling into that trend line that was supporting the price for some time on a daily chart. Be careful, be gentle, no rush. So by applying it, so when the signal is fired, if there is a signal, will there be a signal? We will see. We will go to the hourly time frame to enter the trade. So you will say to me, George, I'm not a swing trader. I'm a scalper. Right? Then you can use the daily chart for your trading setup. If the signal is fired, you use the daily chart as your trading setup, and you will use the hourly time frame for the signal, and you use the 10-minute time frame for the entry. All right. Even if you go to the 4-hour time frame, this is the 4-hour time frame. We have a rising channel. Okay. There is a rising channel on the hourly time frame, on the 4-hour time frame for day trader looking for trading setup. So there's this bearish trend line in place. Are they going to push it out, or is it going to form a higher low to pop up above it? So the rising channel is indicating a bullish sentiment up to that resistance zone. All right. I don't want the video to be too long, so I think I've said enough. If not, put the comment and a question in the comment section, and in due course, I will expand this subject about the 78.6% Fibonacci retracement levels. All right. So, talking about financial market trader, shed more light onto the 78.6% Fibonacci retracement level, like a pro. One should always pay attention to the sector. All right, is the sector market sentiment related to that sector turning from bearish to bullish at a time when its financial instrument is retesting, pulling back to retest, okay, the 78.6% Fibonacci retracement level, or is it turning from bullish to bearish at a time when it rally up to retest the 78.6% level? We can do exactly the same thing by paying attention to the market sentiment relating to the financial instrument itself. So financial instrument has a strong balance sheet, gaining more market share, okay, increasing their cash flow, all right, has a brighter future. But here it is, it pulled back to 78% Fibonacci retracement level. That's it's telling us that, okay, is oversold. But if the company is not doing well and it rally up to the 78.6% level, is telling us that it's overbought. We implement a top-down trading method to trade it. We also talk about the core value. We talk about the characteristic of the stock. Some stock will always bounce up and down around the 78% Fibonacci retracement. So they go up, and then they pull back to 78% level, and then they rally up again to the 78% level, and then they come back again down to the 78%. So they just going around each for every price move. They will be bouncing around their 78% Fibonacci retracement level. So we must pay attention to the characteristic of those stocks. Those stocks very often belong to the leisure sector, consumer cyclical sector, the airlines. You will notice that sometimes they may be bouncing ups and down around the 78% Fibonacci retracement level. We also talk about the core value. Something is truly bad. Here it is going up to 78% Fibonacci retracement level. That's not a good sign, isn't it? Or if something is truly good, all right. So the opposite is also true. The company doing so well, all right, doing so well. Everybody's buying. For next day, stock can pull back to 78% level. So you want to ask why? So a lot of technical traders are taking out the trade and they wonder what's going on. Everybody is shouting and say, why this stock today went down? All right. So is there a market manipulation? What's going on? So after further verification, we noticed that, in fact, nothing was wrong with the company at all. It was a computer glitch of NASDAQ 100, all right, or the NASDAQ electronic market, and computer glitch caused the stock to go down 78% level as it happened, okay, in 2010, all right, computer glitch, high frequency trading, and it caused the market to go down. So what do? You buy it because the core value of that company is good. They are making money. The future looks bright. Everything is nice. And now we see that the stock at 78% level is oversold. For long-term investor, this is the best opportunity to buy a hold. And never don't sell it until you get your profit or you bank your profit. So how do we trade it? So the price rally up or pull back to the 78% level, all right? After initial price move, we will always use a different time frame trading method to trade it. One should not just buy or sell just because the price is at 78% Fibonacci retracement level. So apart from the top-down trading method, which is a technical trading, one can also pay attention to the fundamental because the hedge funds will pay attention to the fundamentals each time the price hit the 78% level after a bearish move or hit the 78% level after a bullish move. So combine the technical analysis and the fundamental analysis at the time when you are trading a financial instrument that is bouncing or hitting, the 78.6% Fibonacci retracement level. Have I been saying extension? Correction is retracement level, 78.6% Fibonacci retracement level. If you have any question or suggestion, put in the comment section. And of course, I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that this is another useless blah, alright, let us know by giving us the thumbs down. If you think that this is an essential tutorial, feel free to share it on Google+, on Twitter, and also on Facebook. This concludes our discussion today about financial market trader. Shed more light onto the 78.6% Fibonacci retracement like a pro. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about financial market traders. Shed more light onto the 78.6% Fibonacci retracement like a pro. Happy trading to you all and speak to you soon.